This is our Forex blog for August 23rd, 2013, which I'm doing on Saturday. I've spent all my time trading and doing automated trading systems, and some days I haven't been doing the blogs like I would like to every day. These are our currency indexes, and they work on all 8 major currencies: the dollar, yen, euro, pound, Swiss, CAD, Australian, New Zealand. I'm showing just the 4 here. And it gives you a wealth of information and lets you see when a currency, what the currency's trend is, whether it's likely to reverse, for instance, when it's at our upper containment bands, when it's likely to find support at the hourly point of control areas or support areas most of the time. And it also lets you see trend line breaks. There's very little better than a nice trend line break, especially when 1, 2, 3 areas, trend lines, lows get hit, and when it breaks, that's likely to continue. Fib targets also work extremely well on these, and you can draw your fibs on the fib area, and those fib targets are excellent places to look for reversals. So not only does this help you find trend trades by buying the strongest ones versus the weak and selling the weakest versus the strong, but it also lets you know when the currency is likely to reverse, when it's at our upper containment bands, a fib target, any major resistance area. And so that being the case, let's say this dollar is going to reverse here. Everybody always talks about trend trading, but counter trend trading can be equally as lucrative. For instance, this pound up here at the high, if you bought it, obviously, and you never got every trade, you would have lost a lot of money against most of the pairs. It fell like a rock. It doesn't always happen, but you can see the dollar fell, the euro fell, a little bit here and a lot here. Markets go up and they trend. They go up and down and they trend. And when they move statistically too far or at major reversal areas, they tend to reverse. It's that simple. So basically you want to sell the dollar at 8 o'clock or so against whatever currency is weakest. These 4 currencies are all kind of trending up. This one's just slightly up, and you can see the longer term trends down. The pound also is going down, so you don't want to be selling 2 currencies that are weak. And also the yen, the euro is up and likely to reverse. So let me bring up some other currencies and see if we can find one that's weak and likely to go up, or just became strong all of a sudden. Okay, so here you have the Swiss. It just broke out. It's above its hourly moving average. The previous trend was up, had a little bit of a pullback. It's been going sideways. Anytime you see a tight little low volatility pattern, breakouts tend to be successful. Anytime it's 2 to 5 hours or more of sideways choppiness of low volatility, breakouts tend to be they tend to continue, and they would likely go to the next fib target, which would be probably 105 to 105.20 on the Swiss index. So the dollar's at a likely reversal area. This one's just breaking out to the upside. So it makes sense to sell and look for sells in the dollar Swiss. Also the Australian, it found support at the previous day's high, and it's also double bottoming there. And this was also the previous day's point of control, which is where most traders have positions in all the Australian pairs. So this is a major support area, especially since it double bottomed here. If it does find support and starts to go up, then buying the Australian dollar also makes sense at 8. So we're going to start with those 2 currencies. We're going to sell the dollar Swiss and look for buys in the Australian dollar at 8. I was just showing how you don't have to trade this with the counter trend. The euro was going up. It found support to hourly. It's right near its highs. The swing made a higher high. The dollar broke down right here. If we scroll back, we can see exactly when it happened. Boom, the dollar broke down. The euro is strong. At this time right here, 435, it makes sense to buy the euro dollar. And you can see 435 right here. It went up about 15 to 20 pips. You can use this to trade with the trend and against the trend. And also, what we're about to release in the next week or 2 is our currency signals. And most days there's 10 or 15 per currency. Yesterday there wasn't that many. There was a sell here that went down a little bit. You can see the previous day there was quite a few more sells. This sell here, this one went up, this one went down. We have a sell here that went down. This buy here went up at 10 o'clock, 10:15. It went up from around 60 all the way up to 10. 50 pip move. Okay, so you can see the sell or the buy up here went up a little bit. The sell in these sells right here, both went down about 10 to 15, 20 pips. This is going to help new traders that don't want to learn all of our tools, don't want to learn support, resistance, Fibonacci, the key support and resistance areas. And you know, most humans can't watch 20 or 30 indicators at once. Some signals work extremely well with certain indicators. Other ones that I have in here, there's over 60 different patterns it looks for that are very rare. And I use a slew of different tools. There's probably over 20, 25 different indicators with different settings. If you had them all on your chart, you wouldn't be able to see anything because there's all the support resistance areas, hourly, 15-minute, 5-minute, 3-minute, 15-minute containment bands, hourly containment bands, 15, 30, 60, 240, and daily range projections, statistical highs and lows. You can see this hourly high right here. It reversed right at the 1 standard deviation hourly high. If you have all these tools on the chart, it would absolutely confuse the heck out of most traders. Most traders just want to see, you know, what is the statistically likely trend, and you know, by using our currency indexes, and then wait for an entry and then get in. And as you can see on here, I also measure and track what the highs and the lows are, the swings. And anytime the market makes a higher high, significantly higher high, and let's say the hourly, it's above the hourly moving average, we look to buy. If it's below the hourly moving average, we don't. So if this little pullback right here or here, we very likely would have bought if price was a little bit higher, but it wasn't. So it was a lower probability trade. You can see what happened. It kind of went down a little bit. If this came down near this previous swing low and didn't break it like this, or statistically wasn't so weak at the time, we might have bought right here. So it's very high probability signals. You can see most of the trades, you know, find reversals at or very near that area. If you get into a trade and you know, get stopped out and then it goes back down, you can short it again, and usually you're going to make more than the 5 or 6 pips you lose when you're wrong. So this is going, and it's basically you're just going to put buy and sell arrows on the chart. It's not going to have the lines for the swings, and I have all of the different patterns in here that let me know. For instance, this was a 3-line break number 1 pattern and a double top number 4 pattern at that time. So it allows me to find where the 60 signals are in my script and enhance them and fix them each day when they do things that I would not have anticipated, which is typically what happens. That's why I've been working on this for almost 6 months, and it's very close to being released.